Ever found yourself dreaming of that new car, the one that perfectly fits your life, only to be hit with the roadblock of a less than stellar credit score? It's a frustrating feeling, that sense of being stuck. You're not alone. Millions of people navigate the complexities of rebuilding their credit while still needing reliable transportation. And that brings us to a crucial question: how does Ally, a prominent name in auto financing, factor into this picture? Can they actually help you get behind the wheel even with bad credit? Before we dive into the specifics of Ally's approach, let's take a moment to understand what bad credit really means in the eyes of lenders. Generally, a credit score below a certain threshold, often around 580 on the FICO scale, is considered poor. This can be due to a variety of factors: missed payments, defaults on loans, high credit utilization, or even a limited credit history. Lenders view individuals with bad credit as higher-risk borrowers, making them hesitant to offer financing. This hesitation stems from the very nature of lending. When a financial institution like Ally provides an auto loan, they're essentially betting on your ability to repay that loan according to the agreed-upon terms. A history of financial missteps, reflected in a low credit score, signals a higher probability of future repayment issues. This risk translates into stricter lending criteria, potentially higher interest rates, and the need for larger down payments. Now, where does Ally fit into this landscape? It's important to clarify up front that Ally Financial doesn't exclusively cater to individuals with bad credit. They are a full-service financial institution offering a range of products and services, including auto financing for customers across the credit spectrum. However, they do have mechanisms and considerations in place that can make auto loans accessible to some individuals who might face challenges with traditional lenders. One key aspect of Ally's approach is their comprehensive assessment of a borrower's overall financial situation, rather than solely relying on a credit score. While your credit history is undoubtedly a significant factor, Ally often takes a more holistic view. This can include evaluating your income stability, your employment history, and your ability to provide a substantial down payment. A stable and verifiable income source is crucial. Lenders want to see that you have a consistent flow of money coming in, sufficient to cover your monthly loan payments and other living expenses. Providing documentation such as pay stubs, tax returns, and bank statements can help demonstrate your ability to manage your finances. Similarly, a consistent employment history can instill confidence in lenders. If you've been with the same employer for a significant period, it suggests a level of stability and reliability. This can help offset some of the concerns associated with a lower credit score. Perhaps one of the most significant factors that can improve your chances of securing an auto loan with bad credit through Ally, or any lender, for that matter, is the willingness and ability to make a larger down payment. A substantial down payment reduces the loan amount, which in turn lowers the lender's risk. It demonstrates your commitment to the purchase and provides a buffer in case of default. The larger your down payment relative to the vehicle's price, the more comfortable a lender might be in approving your loan application, even with a less than perfect credit history. Furthermore, Ally, like many other auto finance companies, may consider the specific vehicle you're looking to finance. A newer, less expensive vehicle might be viewed as a lower risk compared to an older, high-end model. The collateral, in this case, the car itself, provides a degree of security for the lender. If you default on the loan, they can repossess and sell the vehicle to recoup some of their losses. It's also worth noting that Ally works closely with dealerships. Dealership finance managers are often adept at navigating the complexities of auto financing and can help connect you with lenders who might be more willing to work with your specific credit situation. They can present your application to multiple lenders, including Ally, and advocate on your behalf. However, it's crucial to be realistic about the terms you might receive if you have bad credit. While Ally might approve your loan application, you should anticipate potentially higher interest rates compared to someone with good credit. This is a direct reflection of the increased risk the lender is taking. Be prepared to shop around and compare offers from different lenders to ensure you're getting the best possible terms for your situation. Additionally, you might encounter stricter loan terms, such as a shorter repayment period. This can result in higher monthly payments, so it's essential to carefully assess your budget and ensure you can comfortably afford the monthly obligations. It's also important to be wary of predatory lending practices. Some lenders who advertise guaranteed approval regardless of credit often charge exorbitant interest rates and fees, trapping borrowers in a cycle of debt. Ally is a reputable financial institution and adheres to regulatory standards, but it's always wise to be an informed consumer and carefully review all loan documents before signing anything. If you're considering financing a vehicle through Ally with bad credit, the first step is often to get pre-approved. This involves providing your financial information to Ally, who will then conduct a preliminary assessment and let you know the potential loan amount and interest rate you might qualify for. Getting pre-approved gives you a better understanding of your budget and allows you to shop for a vehicle with more confidence. During the application process, be prepared to provide thorough and accurate information. Transparency is key. Don't try to hide any negative aspects of your credit history or financial situation. Lenders will uncover this information anyway, and it can damage your credibility. Instead, focus on highlighting the positive aspects, such as a stable income, a consistent employment record, and your willingness to make a significant down payment. Furthermore, if you have any extenuating circumstances that contributed to your bad credit, for example, medical emergencies or job loss, it can be helpful to explain these to the lender. While it doesn't guarantee approval, it can provide context and demonstrate that you're now in a more stable financial position. Rebuilding your credit while managing an auto loan can be a smart strategy for improving your long-term financial health. Making timely payments on your auto loan will be reported to the credit bureaus and can positively impact your credit score over time. This, in turn, can open up more favorable financing options in the future. In conclusion, while Ally doesn't specifically specialize in bad credit auto loans in the same way some subprime lenders do, they do offer financing options that can be accessible to individuals with less than perfect credit. Their holistic approach, which considers factors beyond just your credit score, such as income, employment, and down payment, can be advantageous. However, it's crucial to be prepared for potentially higher interest rates and stricter loan terms. With that said, thanks for watching and until next time.